All right, I think we are live. Gotta love my new router, whatever gateway thing. before before I got just like all the time. Um, Stream health sucks. Stream health sucks. And now everything is good. All right. So while we wait for a couple of people to get in here, um, I just kind of want to talk through a little bit about this last couple of weeks and just getting everything more simplified and more simplified, um, which is obviously the thumbnail with Da Vinci. I happened to run across that quote today, and boy, like absolute perfect timing to get rid of so many different underlyings that happen to not perform well, like Apple. I can't remember which other ones, but man, it's nice to be all just so heavily into Tesla right now. I mean, especially this last week was ridiculous. What's my third favorite company after Palantir? Um, I think Tapestry, in kind of a weird way. Not that like I think they're gonna see 2 3x growth or anything. Um, but in the way I like owning a company that sells things to people that like when they want to look successful, look rich, they'll buy it, which is pretty cool. I mean, I did end up purchasing it at a pretty cheap price, so I'm probably just gonna hold on to that for long term. Um, but that's it. I mean, a couple of others that I think will do well. Like I think Airbnb and Affirm could do well, but I hate, I don't know, firms kind of I kept thinking about purchasing some, but it kind of sucks to pray like make money on the people who are spending, I guess, irresponsibly at the end of the day. Airbnb I think will do pretty well over the long term. I mean that's pretty much all I consider now. Like when I go travel, it's like just find a place on Airbnb. It's no more hotels or anything like that at all. What's up, Charles? But I did, and then thinking more about just simplifying everything. Um, I did. I was just like kind of writing a list of things, which is why like I want to put this out here, so it's kind of myself saying it, and just kind of keep this stuff in mind for my own self, and just using credit spreads, which has been the majority of the success in my account. I mean that's like a 600% is probably what I've gained on just my put credit spreads. I mean a little bit plus or minus here or there. I've probably lost more money trying or using other things, and if the gains were there, they weren't that huge. But I mean, really, our batting average on the put credit spreads, it's got to be 95%. I barely. There's only been a couple little instances where I actually needed to roll them or close them, but throughout the last year and a half of using those pretty solidly, it's really been a handful of times, and I just think they're super simple. They're easy to learn. They're faster to learn than most of the other strategies with indicators, butterflies, whatever else is going on. They're super simple to manage, um, and even learning when you're opening them. To me, it's like you just have kind of a list of how much risk you want. If you want a lot of risk, you're closer to the money. Less risk, you're farther out, down to the point where you're super duper far out of the money if you want no risk. And they're just much more. They're more efficient than selling cash covered puts and most other strategies. Yes, you can have some better gains on some other ones, but I don't see another strategy or another option to play that is just more efficient with your money. Fewer mistakes. There's a lot of plays where they're easy to play incorrectly. Whether it's getting whether it's getting like wrong strike prices, not understanding how volatility plays into them. There's so many different ways to screw up a lot of the plays where or put credit spreads or just credit spreads in general. They're so simple, and they're effective. Like it's been a year and a half of just doing that straight up, and I mean they work. After trading options for a while, credit spreads got me back in the green after losing a decent amount. Yeah, and I mean that's so awesome. I mean I don't know what else you need, and I think that's why a lot of people they essentially like. I feel like in the beginning you want to try, like, of course you watch videos and you learn kind of all you can, and a lot of people are like, let's try this, like here's a, you know, whatever, here's an iron jade lizard upside down Christmas tree, whatever. Like there's so many different things, but I don't think you can't really go wrong with them. I mean, of course things can move against you, but I mean, being profitable when you're up, down, a little bit, sideways, I don't know. I don't know what else to say about that other than I just think they're 100% the way to go. And also me finding a stock where the underlying, where I have complete confidence in them, just works absolutely amazing. Yeah, are you still doing SPY spreads? Yes, I'll continue to do those, and I'll do them Tuesday for Wednesday and Thursday to Friday, just to have like a little bit of some variation. But like, as we just had a whole bunch of stuff expire yesterday, and then so I will basically, this should be all you see in my account. As soon as this DraftKings call expires, I'm gonna get rid of my my leaps on that. I'll continue to play the Tilray wheel, and I'll hold my Palantir and sell covered calls on those, and then I'll just play the SPY spreads. They're pretty simple, and since I keep my stop loss at basically 2x premium received, it's pretty simple. So not a lot of loss there, even though we're putting up $2,000-$4,000 worth of collateral when our max loss is maybe like 10%. It's not too bad. 10 to what's like 16%, something like that. It's not too bad. And more often than not, the SPY is not going to drop 8 points overnight or just during the course of 2 days. Just more often than not. Not saying it can't happen or we won't get stopped out, but it's got to happen. It's got to happen once for every 2 times we're right on it, just to break even. So yeah, we'll continue to play those. I do basically, I've been playing basically Tesla put credit spreads in my other accounts too, but it's just effective. And part of what had me realize this too, and why I wanted to pare down some things, was on my other accounts, I play a little bit more out of the money than I do on my Robinhood, since my Robinhood is really accessible and I can just see it every day. But I don't even think about it. Like, I'll set them and forget about it. I'll come back. Actually, like yesterday, I had a couple little alerts saying basically you have options expiring today, and they were open so far out of the money. I don't even have to think about it, which is, this is not passive income by any means, but that's pretty close to as passive as I think you can get without something actually just, having money in an interest-bearing account or getting paid dividends. Actually, it was funny. I was going through some of my accounts, realized that I had one account where I've accumulated like $2,000 some worth of dividends, and another one 500 some, and I usually go through and I'll reinvest it. And I thought I had auto reinvest but I haven't looked at those accounts like really into any detail for the last I don't know, it must be 4 or 5, 6 months or something like that. So we do still have some of those. So those are some of our stability. I wonder if I have any other. I don't think I have any other stocks that I really, really, really love, want to keep or anything. Yeah, Tapestry. That's just gonna be my third favorite stock. Nothing else I really want to own. Do you do trading for a living as your day job, and is it realistic for a young person? I don't do it for my day job. I could, but I guess like plus and minus. My day job, I like it. I enjoy it. I get to meet a lot of people. It gets me out of the house, out from in front of a computer screen. I make really good money for a minimal amount of effort. It is um, it's very flexible, so I have times where I'm just tied up for like 20, 30 minutes, and then I can get back to trading or whatever I want. And the owner of my company is awesome. He treats me like he works for me more than the other way around. And I make I make quite a bit for, I feel like, the effort I put in, and it's a field that I have a lot of experience in. But it's hard not to take that extra money. But sometimes it is hard. Like when I'm looking at this week, so trading, but this isn't like realized gains. Like I'd have to sell out my Tesla shares to grab all this $18,000. But it's hard to see we're up $18,000 for the week, and then we'll go to work for a week to make a couple grand. That becomes difficult. But we know we also can have some pretty decent down days too. Let's see. And is it realistic? So, yeah, it's totally realistic. But if you're thinking about actually like day trading, you need to build up. Obviously, you need to get some seed money somehow to get started. If you have minimal overhead, maybe, I don't know, if you still live with your parents or something like that, and you can take a couple years. Like I wouldn't expect to learn it and then be profitable. Maybe until your second year, to where a lot of the movement and what you're doing becomes an instinct. To me, it's like learning a new language, learning how to read music or something like that. For someone, like if you just taught me without knowing how to play a piano, how to read music, like it's going to be pretty clunky. And then you get somebody that's been doing it for a few years and it's a completely different situation. So just have to set realistic expectations, give yourself a few years, make sure you actually like it. And specifically like day trading, realize you're glued to in front of a monitor. It's not any of the BS like, oh, I'm sitting on a beach doing my trades. No, that's not realistic. It's paying attention to news, reacting to news, sitting there watching charts. So I think but then also, no matter what, it's a skill that you can take with you for a lifetime. Kind of like playing music. Like once you've learned, that's something that's enjoyable that you can use the rest of your life. Another language, you can use that for the rest of your life. And trading, I don't think anybody would ever stop. Like that's one of the things that I talked to my CPA about, because you can use the accounts, right? Like the IRAs, and you stick money in there. And the thought is your income is going to go down when you're older, and then so you can take it out at a lower tax rate. But the problem with people who trade, it doesn't matter. Like they can be 75, 80, 85 years old, and they're probably still going to trade. If they've been doing it for 30, 40 years, and it becomes second nature, why would they stop? And they're profitable at it. So they just keep making money. And probably the younger you are, the easier new concepts are going to come to, as opposed to somebody older who's just getting into it. So even if you don't like go full on day trader or anything like that, just paying attention, picking up what you can, play with a small account, play a paper account, something like that. Like you're never going to be disappointed with the time that you put into it. I don't see it at all. I'm super, like, this is the best hobby I've ever picked up in my life. It's easy, it's fun, it's interesting. I won't say it's easy, but once you get to know it, it's easy. Just like somebody playing music, it's easy after a while. But it is pretty simple. I can use it forever. You happen to make money off of it. And it keeps you in touch with a lot of news that you probably wouldn't otherwise, which keeps everything pretty interesting. How much money have you started with in your Robinhood account? This account was started with $575. And we started this account right before the virus hit. And that's how we gained our initial nice bump, was some puts on some various things and playing the bonds. So we took $500 and some dollars up to about $50,000, $40,000 to $50,000, and then we traded sideways for a little while in this, and then after that, from 50 to, it's actually, I think we're up 272. No, we've taken out $50,000, right? So we've taken out 55,000. So we're up about 300,000. So we've made about $300,000 from 500 overall. And that's just in, I guess it's been a couple of years now. My question is, you say open the put credit spreads the day before. Do you think it would be a good idea to open up a call credit spreads with it on the day of expiration, even if you did it 8 points away from the strike? Yeah, I mean, you can play you certainly can play both sides if you want. With playing with such a small amount, I wonder how good the fills are. I mean, and I do that. I have been doing it on a Tastyworks account where I play spreads and I use the SPX to play. But pretty similar with the SPY. It probably is. Grab a couple more bucks. But the problem to me with put credit spreads versus call credit spreads is, to me, like, put credit spreads you can roll out, and call credit spreads, they could become contested and maybe the market never drops again, if that's part of it. But I don't see any problem with it. I play them. And you could even do more. You could do further off the strike if you wanted to. Most of the time playing a call credits, it's an iron condor at that point, right? So most of the time opening up an iron condor instead of just a put credit spread a day out, you're just going to collect some extra money. But since like Stone or Raul came on and he kind of introduced that method a little while ago, I'm just going to follow it. I mean, it's stuff that just all makes sense. Maybe we'll do a few of those, but yeah. So I wonder let's see. Well, now we have 2 days of decay. Maybe we'll look at that Monday. Probably makes sense instead of having 5 or 6% gain. Well, we had 5, 6, 7% gain. Yeah, you could have a 10 or 11. I don't think it would be a bad idea. I think you should do it and let me know. Man, there's a fly in my coffee. That's too bad. Maybe he's thirsty. Are you guys holding any Tesla? I think this was such an insane breakout right there. I'm super excited for this next week. Red Week coming up, maybe. I hope it cools off a little bit. The other part of what I do, I buy $50 worth of Tesla every day. So, I mean, the lower it is, the cheaper I get it. And I think inevitably we're going to hit $3,000-$4,000. On the shareholder meeting, somebody asked if we're going to do a stock split soon. Elon said no, but last time he said no to raising capital, it happened pretty quickly. And I don't know, if we start hitting that $1,000, $1,100, $1,200, then I see a split coming too. And then yeah, I mean like 900 is such a number. We'd have to. I feel like we'd have to butter through the 850, like just rip up through it to get anything higher. But other than that, I think it should bounce off of that for a little bit, even coming into earnings. But I was just looking at that too. So last earnings, we had that pre-earnings run up, which was, I mean that wasn't very much. So 640, like a $30, and then we had that dip down because that's just what happens. It seems like after earnings, but it wasn't. But a couple days later, and we were back up, and then we did pretty well from there. What was this drop? Maybe this was like NHTSA, I think the NHTSA investigation, and then up from there. Yes, I must say I've watched that video with Ro like 5 times. Awesome strategy, I must say. I like the fact that he puts his own winnings into stocks he wants to own. Yeah, I like it too. I just like, and he was part of that catalyst for me changing what I did. I think it was like, oh, he just plays a simple strategy twice a week. Like, how stress free is that? He's only got to basically manage it, for probably a couple days out of the week. Yeah, I like it so much. I should see if I can like snip that out and do a separate post. Or if he shows up here again, I'll ask him. Actually, I should shoot a comment over to him. I saw he commented yesterday, I think. Um, are you a professional trader or just doing it for fun or part-time? What is your main profession? Uh, I guess, well, depends how you define professional. Professional is just somebody that gets paid for what they do. Doesn't even mean they're any good. So by that definition, I guess I am a professional trader, but I do not do it full time. I do it for fun. The biggest thing was a learning experience. Like that was the biggest reason getting into it in the first place. Where I think when you first start looking at it, I mean, I couldn't. It's like, what do those candlesticks even mean? I remember that, and it was such a huge world and so much to learn. That's what really interests me, and that's just part of kind of who I am. I love to learn just completely new fields that are outside of my current knowledge. So kind of did the same thing. Like my last thing before this was an Amazon store, and started that took about a year and a half, but that's been going ever since. But it was like a whole new world to jump into. So yeah, so the education, fun, and I do it part-time. I do it, and I'm wanting to do it actually less and less as far as the time that I put into it. That's why I want to just start to keep it more simple. I want to just put on my trades, let theta decay, make moves if I need to, but for the most part not. That's why I want to simplify, not having, my butterflies, random calls, puts on various things or different underlyings. And then I do outside sales for a company. So I'll have 3 or 4 meetings a day, just kind of in my area. So I go out, meet with people half an hour or so, and then that's it. That's what gives me a lot of freedom during the day. So like most of the videos that you see on my phone, that's just in my car, just between appointments, and just take a look at it, maybe make some moves, and that's it. But if you're gonna get into a part-time hobby, I mean, this is the one. Profitable. What would the split? What would be the split 3-for-1? I don't know. I guess probably depends on like how high it is prior to the split. 3-for-1 would be awesome. If it goes up higher, maybe we'll do another 5-for-1. I don't really know that. I don't really know if there's numbers that they want to hit, like when they're doing the split, like if they want to bring it down to a $300 level or something like that. I don't know the answer to that, but I mean, either which way, that'd be another another rocket up. It'd be insane, and then a lot more people could afford to do like cash cover puts on it, which would be really, really awesome. I mean, if it was a 3-for-1, and we can start doing like 300 cash covered puts. That's super cool. What's up, H-Mans? What was your initial principle when you first made a Robinhood account? What do you mean? My initial principle? Like, what was I thinking? Or what? So my initial deposit was $575, and my initial thought process was, let me learn some of this stuff, and if I lose 100% of my $575, it was just education, and I learned something the hard way, and it cost me money. Education in any form is expensive. Like, I mean, I could go pay that $575, go to school, take a course, do whatever trainings or whatever. But my thought was, I'll just do this, see how it goes. I made tons of mistakes. I still make a decent amount of mistakes. I make some fat finger mistakes, like where I'll buy instead of sell something. So I've done that a few times. But all part of the learning experience. And I think that buying instead of selling just happens to be a Robinhood glitch where it doesn't flip over from the buy to sell, at least on the mobile. Their mobile, as far as on my phone, seems pretty jacked. I don't know if that's an Android thing or what. Yes, sir. What's your 2 questions? And part of it was I made the Robinhood account hearing initially about the virus coming out in Wuhan, and at that point I did not know how you made money when the stock market goes down, but I heard about that, and I thought what happened could happen. I didn't know it would be. I had no idea it would be to this level, but I thought the economy, like overall, could be negatively impacted. That's actually what got me started with it. That's what got me started into trading pretty heavily. And I was like, I need to figure out how you make money when the market goes down, which is how I did make my initial 50 grand from that 500, was just buying a bunch of puts like very early. I played the bonds very early, very cheaply, because looking at any of the charts, nobody thought the bonds or the indexes were going to go where they were going to go. So like Carnival Cruise Lines, TLT with the bonds, SPY puts. That was my initial like real huge jump up, and why I started that too. That was another reason. Robinhood made me use $100 collateral to sell a call on my leaps. The reason they made you use to sell a call on your leaps is probably because you sold it below. So you probably sold the one below your leaps price. So if you have a leaps at $50 and then you sell a call at $49, so if everything gets exercised, let's just say you're having to buy at 50 by exercising your leaps and then sell at 49, that's $100 loss. So wherever you sold against your leaps, if you move that up $1, then they wouldn't have asked for any collateral. It has nothing to do with your leaps being in the money. It's just the difference between your long and your short strike price. So that should be the case on yours, right? Yeah, I did because I just want to exit out of it. Make sense? Yeah. Cool. Oh, you did because you want to get exercised on it? Awesome. Yeah, that's not the best way. Like, if you want to get rid of it, I don't know how far out your leaps are, but if you got exercised on that, you would basically be losing all the extrinsic value of your leaps. So that would be a terrible way of getting rid of it. The best thing to do would be close your close the one you sold against it, and just sell your leaps. If you're still bullish on it and you want to take some risk off of it, then just go out to that leap state and sell. You could sell like right above it and collect most of it back, and then you still have a little potential of making money long term. Same, I got into options during COVID. Yeah, I got into it like right before. Like, I had so many weird things that happened, like just at perfect time. I actually had a huge 401k account that kind of forgot about. I know it was there, but I didn't do anything with it. And right before COVID hit, I decided like I want to actively manage it. And this was part of getting into the stock stuff. So I had a check, like it basically closed my account, and a check got sent out to me so I could send it to my new brokerage. And that was the time when everything just like crashed. So I saved myself from that old 401k losing whatever it was, 30% of the value, whatever the SPY did at that point. And then I was able to bring it to the new brokerage. And then it was like, whatever we're up on the SPY, because it's mostly index stuff. And then double it like after that. That was so perfect. The fact we got into it right during COVID, my company shut down for a month and a half, so 6 weeks. So it was 6 weeks of straight. That's all I did, because what else are you going to do? You can't go outside and play very much. During that time, it was scary to go to the grocery store. I remember it was like gloves and masks. I remember when I don't know where you guys, or what was going on where you guys were at, but like where I was at, everybody was wearing gloves in the grocery store. That was huge. It was crazy. Like disinfecting everything when you brought it home before you ate it. Lysol on your oranges or whatever it is. It was crazy. Amazon packages. I remember my friend's mom, she would let it come to the house, and then she would either like Lysol them or like let them sit for a week. So if anything's on it, it would die beforehand. But I had, that same selling against leaps thing, because I have that one. I have a Palantir $30 call in that expires January, which probably isn't gonna make me any money. But yeah, I do the same thing. I sell against it at 26 or 27. So I need to come up with, it's like $300 or $400 collateral to do it. You figured if it goes up $1, I could get a sign and make an extra $100. I'm down like $350. No, because your call that you sold, that's the one that can get exercised on you. So you're forced to sell it at that price. Your call that you bought gives you the right to purchase it. So I don't know what the dollar amounts are, but whatever it is, they're $1 apart. And if it gets exercised, your short one that you sold, then somebody's going to say, okay, I want those 100 shares at this price, give them to me. And your protection is the one that you purchased. So that means you're having to either like purchase them for 50, sell them for 49. So that's $100 loss, or, wherever they're at, buy them for 350, sell them for 349. So if you don't want any extra collateral, or you don't want the risk in exercising, you just need to sell it above that long strike price. What I do most of the time is I'll take my leaps price, figure out what I have in there. So like, let's say I bought one for a $20 leaps for $600. So that means basically I have the strike price of $20, and I add in the $6 from the $600. That's what it cost me. And then I know I can sell at $26. That way, if it get exercised, the worst case scenario is I'm break even plus whatever I've been able to sell collateral wise. Because otherwise, you could be selling those calls against it and be negative, unless it's something that's so down and you can't sell calls against it for a decent amount of money. I mean, of course, you might choose to take some risk there. And that's like on my Palantirs, I'm kind of okay with that. And if they do get close, like if you get in the situation where it does get close to that short strike price, you'll want to roll it out, roll it up, roll it out, roll it up, kind kind of slowly, not too far out, because if it keeps moving up, you're not going to be able to roll out and up relative to the price movement enough to get your money back. And I don't know if that makes sense. It's just something that I've experienced. I've sold covered calls, and then the underlying went up so much to where I have one that I'm negative like $1,200. It's actually an MGM. This is from experience here. Can we see it over here? Here's my and it'll probably only make sense when you do it and you're like, oh, now I get it. Oh, there it is. Can we see it on the screen? Yep, my MGM down 15.26. I sold a $27 call on it. So that's pretty much garbage. But I'll wait until that time, see if I can roll it out a little bit, grab any more money. But I mean, pretty much I'm selling. I am going to be selling 100 shares at like $27. Do you have a Discord where you can update your option alerts? I do have a Discord. I don't spend a whole bunch of time. Maybe when I quit my job, I'll spend more time in there. But I don't do any option alerts or anything. It's just basically the daily videos that I make. It's pretty. I just make it easy for myself because I can go through there, let you guys know what I've done for that day, and the purpose of any of this isn't just to show you, hey, I did this trade, and then you copy it. It's really, I want you to learn like why I do it, and then if you agree with the trade or something makes sense, you could do the same trade or maybe the same trade on a different underlying. And that's why I just kind of I try to go through my thought process, like pretty much with any events that are going on, news, prices that I'm looking at, just pretty much anything that I'm doing, I'm just putting my thoughts out there, and I hope to make it helpful in that way. Or like today, if you have any questions on anything specific, then let me know. But I think, I can't remember, I think the Discord link might be broken actually in the description. But if you go to any of the other older videos, I think it should be updated on there. I need to remember to tell my VA. I have somebody else, so you'll see like my thumbnails will change. I actually have somebody that does that. She should update all that stuff and like updates thumbnails and all that stuff. So I just do, like, you'll see one that comes out and it's super crappy and just red, and then she does something else. And the biggest problem, and maybe it'll actually get easier going forward right now, or like through this past year, I've been doing a lot. Like I feel like too many plays, but I hope to simplify everything. So maybe that'll become an option where I can actually do some alerts, maybe like even a text alert or something like that. And when I start to consolidate them, I'm hoping like once a week, maybe twice a week, I just open up like a block. Like, here's 20 put credit spreads. This is it. This is why I'm doing it. Something like that, like as I'm doing it. Because some of them I've done, like, what was it, yesterday? No, it was Thursday, where I opened and closed the SPY put credit spreads before I even made a video. Like, I opened them up in the morning, SPY ripped up, they got closed at $1, and it was already done. And then I also do, and this will probably get better too. One of the reasons I don't want to say here's every single one of my trades, because I make some that are like absolutely like YOLOs. Like, I don't recommend it. Like, don't do these trades. I've said that in the past because they're very low probability. They're usually high risk, high reward. Like my butterflies, I have some butterflies that are on. Those ones are wherever those guys are. Well, it's showing that I'm up $120, but that's not accurate. It just, like, during the close, it showed that it's a little bit high. But like those are high risk, high reward, and I wouldn't want anybody blindly copying it when they don't know why. And then they don't know like how to manage it or what to do. Because I've had a number of people come to me, email me, or DM me about trades they saw. They'll see somewhere else, somebody that does like just trade ideas, and so they'll copy a certain play, but they won't really know like what to expect. Like, hey, here's my account. What do I do? Like, if you don't know how to close it or deal with it, like you just need to put it in a closing order, take a little profit, take little bit of loss. But I don't want to get in that situation either. So if I want to get out the leaps, just sell the close instead of selling calls right at the money because of the intrinsic value. Yeah, well, no, because of the extrinsic value, actually. So it's the time on leaps. What you're selling right there is the time. So and it's the difference. Like if you look at the one that you bought, the leaps that you bought out, I don't know, a year and a half compared to that same strike price that's expiring like next Friday, your like that price difference, that's extrinsic value. That's it. Intrinsic value is only the difference between the underlying price and the strike price. So if it's moved against you, it could be that could be very little. So your extrinsic value is the majority of what's going to be in the leaps at any given time. That's why they can move so far against you and they're still worth something. Like I don't know, we could look at them actually, because I have my DraftKings that has moved highly against me. But where's DraftKings? So I'm down a ton on it, right? Total return, I've lost $1,700, but when does it expire? 1/20/23. So we still have another year on this, but this is worth right now $1,000. And so that's a $50 call. And if we look at like next week's $50 call, it's worth $74. So that difference between the $74 and that $1,015, that is extrinsic value. That's exactly what it is. Oh, okay, good. You knew what you're talking about. Yeah. So, but that is, and that's the reason. Like, if it got exercised, you could buy like this. If this $50 one was to get exercised, like it's basically costing me $74. Where if the leaps got exercised, that would cost me $1,000. So that is why. So just sell the close. Yeah, just absolutely. So like one of the two things that I would do, let's see. So I have these 2023s. So I would either just sell it, get rid of it if you're just like, hey, I'm done with it. Or the other thing that you could do, like if you're still actually bullish on it, you could come up to the strike above it, sell that one. So you're collecting most of the money that you still have, right? Like I could sell this for $1,000, but let's say I'm still bullish on DraftKings, but I want my collateral to do something else and I want a little upside. I could sell this 838. That way, this play is only costing me $160, $170, and I get most of my money back. I'm still bullish on it. That's the other thing that you could potentially do. So one of those two things, or just get out of it, move on, and go do something better. I really like your strategy, especially credit spreads on Tesla. You made me fall in love with Tesla. Awesome, dude. Tesla's, I love Tesla too. Yeah, I don't know how deeply you've dived into it, but man, if somebody could sell me a better company than Tesla, like I'm all ears, but I think it is just going to be the highest valued company, period. Not over the next couple years, but 50% year over year growth is just nuts. Everything is just crazy. Like to me, I bought shares at 800 a while ago. So, and I'm still happy with that. I still think like right now, like even though it popped up $850, at $850, I still think it's a damn bargain. Well, I know what I'm doing now. Monday, I've been selling calls right at the money. Yeah. Stone, you're changing your stuff? I've been doing your plays. Did you have to close out your SPY put credit spreads couple 2 3 ago or something like that? And I think right now, so um I think right now is like it's a little iffy just because there's not a whole lot of premium to sell right like exactly where I'm going to be comfortable, but I don't know. You'll probably just go all in, buy a whole bunch just expiring in a day or something. So you're going to like, but you think about switching your SPY put credit spreads. It was pretty cool. I don't know if you've noticed, but like a ton of people asked about your SPY put credit spreads. Tried to remember to give you credit every time I can on that one, but that's been pretty awesome. I played them on Thursday for Friday, and actually just closed out Thursday. Will they close the same as well as you? Nice. Mm. And I had one. I had some like two. I think it was like last week or the week before. I can't remember, but they were like pretty dang close. I think if I was watching it, then um, if I was watching it, I may have closed it because it came super close. And just to clarify, almost I don't know if you're down just to do like a video on that, kind of like just I guess exactly what we did, just so we wouldn't have to, so I could record it somewhere else and then cut it up. Um, but like a ton of people have just been asking me about that. I've been dabbling with Stone Spy plays too, just not 9K worth. Stone OP. Yeah, a lot of people have. It's super cool because yeah, when we were talking about it, he said, "I don't know if I'm doing it right. I think because I don't see other people doing it." And now he's the guy setting the trend. Like, hey, I do this, and now other people are following it. It's pretty cool. Who cares what other people do? Yeah, the most I've done. Um, I think I did what 18 or 20 of them or something. I haven't done that much. I did 650 this week on Spy. What did you start at? So you're at 30K. Where'd you start? Did you start with 10K? And that was super cool. That yeah, Thursdays that closed like was that a I can't even remember, like a 30-minute play or something for 4%, something nuts. And then I like the previous ones, they closed like 20 minutes after market open or 10 minutes after market open, and it was just done. 20K, nice. So 50% up in, and you just started doing that a few months ago. Thank God. Yeah. Well, the nice thing is you can't give all that back the way you go. If you close out with a double your premium, like you just can't go backwards using your strategy, which is nice. I mean, it would take what 10, 11, 12 losers in a row or something like that. Oh, I guess no, five or six losers in a row. I followed your rollover strategy and rolled out SPY and closed it on profile. On profile. On profit. I'm gonna do Tesla now. I hate looking at SPY every hour. Isn't it? It's so funny. I swear to God, the longer you do it, it's just like you just want it easier. I'm just worried. Like I hope what I kind of hope doesn't happen is I go, all right, this week, this month, whatever. Like and we see that uptrend, and then people get like the FOMO and then start to do it like anywhere aggressive right now, which is where I hope nobody's going to be being aggressive, just because we usually do have a pullback after earnings. Whether that's going to happen this time or not, I don't know. I don't think we're going to have a major pullback. Kind of 50-50 actually. I don't see a reason why we would. I think we're having an earnings beat. I think the PE ratio is going to get way more palatable, like down in the low 100s compared to last time it was at 800-900. We were at a forward PE of like 1,000. So it's come down almost 70-80% or something like that. So I think it's like way more palatable. And if anybody pays like a modicum of attention, you'll know that Tesla is like they're not going to have any surprises, and hopefully nobody's expecting that. I'm for sure going to wait till after Tesla earnings. Good. Are ready to move from $500 to $1,000 per spread? Would you do 2 contracts or increase width? I would do 2 contracts. No question. You just get more out of it. And I think, and the part of the other reason where you're losing money isn't very much different. Like if it moves against you, isn't very much difference with the $5 or $10 spread, or 500 or 1,000. And if you're getting anywhere close, usually you're rolling it out either way. So you're going to take the same action. You're going to take the same action relative to the strike prices, regardless if they're a $5 or $10 wide spread. And you're just getting more, but you're able to open up the 2 for more credit with the 500s. Let's see. I think looking at the SPY charts are kind of fun, but and I totally get what you mean, because my SPXs I play on the other account like that. I guess if I had nothing else to do and I had a boring day, playing the SPX Iron Condors is like, oh my god, like it's fun and it's exciting. I'll call it exciting. Like even if it's good or bad emotion, it's more emotional. And it is like you're watching it minute by minute, tick by tick. Oh God, what's the news? What did Biden just say? Like, what is Jen Psaki saying? What is Janet Yellen saying? Like whoever, and then like how that affects it. And then we also have to pay attention, FOMCs. We have to pay attention to so much when that's happening. So 100% like way more exciting. But yeah, to not have to do that and then still make good money, that's pretty awesome too. I just can't, like, when you're actually calculating the gains on your SPY put credit spreads, it's so awesome. 5%, 6, 7, 8% twice a week. Like, what else can you do to beat it? And I don't know what you do during the day, like your day job, but that stuff, that's got to compound quickly. And you did 10 grand over. You didn't say, let's see. And I think it was a couple, 2-3 months that you've been doing that. So you like 50% in a few months. Like that's awesome. That's worth watching something. What percentage return do you look for in an SPX Condor? It depends. It depends like which one I'm playing. Yeah, my all-time chart. Sure. It depends. It depends what I'm playing. If it's like I've been playing some 0 DTEs, 1 DTEs, something like that. And I think, let's see, where's my, actually need to jump into, do I have that account on here? I'd actually need to jump into another account, but it'd be, I think it's like 4 or 5% or something like that on the SPX plays. I can update you on that, but 2 months for 50% up. That's amazing. And let's see. I started with $500, $575. But and then like what kind of, I don't know what kind of example you want of on here. I don't have my, I'm probably not going to put up my Tastyworks account. But I don't know if you just want to see like what it looks like to open up one. If we went Monday, and then actually on Tastyworks, which I really like, is they have the standard deviations, which I do play against the standard deviations on Tastyworks over on the call side. But an example, let's use what Stone does on both sides. Even though he does a put credit spread, but if we add a call credit spread in, then it's an iron condor. So we'll go 1, 2, 3, 4, 5, 6, 7, 8. Boy, not a whole lot up here, but it's okay. So that is our call side, just $1 wide here. Selling the 452s, buying back the 453s. And then same thing, we'll do the same thing on the put side. 1, 2, 3, 4, 5, 6, 7, 8. Sell. We want to sell the 438. Buy the 437, and that's our iron condor. That's looks pretty gross. So, but I mean, this is only 2 cents, and it's after hours, so these numbers are not necessarily accurate, especially like right at close. Some of these get messed up. The SPX is definitely way more granular and liquid. So on Tasty, you can get better fills. But this is an example: $8 out of the money, so which is pretty decently wide. And we keep our $4 on our $100 collateral. If this was just like, I probably wouldn't take this trade. That's just not very much. On Tastyworks, I would look at it and look at what the expected move is. But that is all. That is how you open one. You'd probably want to get just a little bit tighter though. If these numbers are accurate, you'd want to get a little bit tighter, so at least it makes worth putting your $100 worth of collateral up there. You mean 5% on one side? No, it's like 4% total. It's 2 cents on each side, if that's what we're talking about. So, because it's $100 collateral, because we have $100 wide, so that's only 4 cents. If we wanted to go, could go a little bit wider. This would cost us $200. And $200 for 7 cents. It's just hard when the market's not open. None of these options are updated, the actual current prices. So we can't, we don't know whether or not this is accurate. It's just exactly like what was that one that it shows I'm up on? This thing. This is what happens like at the end of the day, right? We know this was chilling 4, 5, 6, 7, 8 cents, and then 12.55 happens. All of a sudden it goes 28, 25, 52 cents. Like that didn't happen. It doesn't go from 9 cents to 5 times the money in the last couple minutes. It's just a screwy thing that happens after hours. How many contracts each time? It's like, that's up to you. That's so on my Tastyworks where I do it, I'll do, it actually depends like on confidence. Where it seems like we're running into a crazy week, I'll do less. I'll just do 1 or 2. But most of the time I'll do like 5, but I do them $10 wide too. So I'll put up $5,000. But it also depends. So it depends on how volatile things are. Like there's a lot that goes into it. The Tastyworks, The actual reason that I opened up my Tastyworks account was for all the information that's available in there. I actually wanted to see the Greeks plotted out so I could wrap my mind around them a little bit better initially, which is why I opened up my Tastyworks account. But then, of course, there's other benefits to having it. But one of them that's really nice when you're opening them, you can have the standard deviation, which is it'll show you right there where you have a certain percentage probability of profit based on where you're at, and it just like marks them like, here you want 84%, here you want 96%, here you want 99%, here. What's up, Velocity? So yeah, I think I answered that. Yeah, started this account. Oh, yeah, started this account with $575, and we've taken out. So I've actually withdrawn about $55,000. When did we start it? We started it November 8th, 2019 is when we opened this, I think, since that's all time. And then I think I bought a stock or two. Like you can see between all that time, well, we made $64 or something like that. I don't know what I made that initial couple $100 on, but then from February 14th, that's where we had the big dips. That's where I bought calls on TLT and puts on just about everything else. So that was just amazing, right? Going from like pretty much $500, and then we were plus $73,000 between February and March. So like in 1 month. 1 month, I mean, think about this. This is like walking to the casino. You push the button on a slot machine and you hit the jackpot that's been building up forever. Like in my mind, from 500 in a month, from 500 to 73,000, that was like, holy crap. Like, well, I should quit my job tomorrow. Like, that's too damn easy. But those are all the right conditions, with some forethought on what was going to happen. That actually did. I mean, could have gone another way, right? Could have had a vaccine. Maybe China had it ready. Could have vaccinated everybody, and maybe it didn't spread worldwide all crazy like it did. And then from there on, this kind of stagnation between, this was March, April, May, June. So we barely moved in that, and I was trying out several different strategies on this account, and really wasn't getting anywhere. And I was like, okay, let's see what's working, what's not, what makes sense. And I was still kind of like a lot of people, just exploring, like, hey, there's this strategy, that strategy. I'm listening to everything and really figuring out what I wanted to do. And from there, that's, if I could look back, my documents are so super long on this account, but if I go back and find out when I opened up my first put credit spread, it was probably there, because I think I sunk some money into Tesla shares in this account, and then started playing the put credit spreads. And yep, we've had some pop up and pop back down, but for the most part, after that, it's just been positive along the way. This last quarter has just been crazy. Even though now it shows it on kind of that smaller scale, but like we've had some pretty good dips over a couple days, like 188 to 160. That's a heart crushing move. If you haven't been through a few dips before, my God, 20 some $1,000 in a couple days. Some of this stuff, what is this one? 20,000-ish? I don't know. But that's all part of it. Some days are pretty awesome, and some days, like the first time you have that big dip, it sucks. It sucks big time. And then a few more times you're like, yeah, okay, part of it. It's part of it. Time is it? 12. Let's see. When do I have to be? Oh, I still have a half an hour. All right. What else do we need today? Anything else? I'm wondering if like how much like if you guys started thinking any differently about just kind of like paring some stuff down and making it simpler. For some reason that's like all that really resonated with me. Like definitely credit to Raul. Definitely I mean credit to Debbie. Debbie was one that I know she comments quite a bit, but she emailed me and she's like, I do this play. I only shoot for like 2% every month or so. I can't remember if it was once or twice a month, but like 2%, super far out of the money. And I was just like, oh my gosh, she's probably so relaxed doing it. Actually, she's like still a little bit worried, but it's like put credit spreads on Tesla like at 530 or selling cash covered puts at like 530 and stuff like that, where it's like, to me that's a 0.0001 chance of like even getting exercise. And I was just like, that is so relaxing. Raul going over his play where it's like I just do the same thing over and over and then I stick money over here. Like, okay, simple. Like why do I need 20 different kind of why do I need butterflies and iron condors and everything else when I am so secure, so comfortable, confident in Tesla? I don't really need much else. What's your favorite stocks for put credit spread? Tesla. Tesla. That's why we have 350 contracts on Tesla right now. 350. $15,000 realized on these guys. I think we have 15 or 350. It shows it somewhere in here. Let's see. Come on. Oh, I need to go to Tesla. Duh. Dun, dun, dun. Strategies. Oh, that's weird. It shows strategies. On my mobile one, it shows how many contracts I have. 36 different strategies. I don't know, but these are all my put credit spreads, and I have a few debit spreads. I had an iron condor that was literally worth nothing. I got 100% profit, but still cost me $30 if I wanted to close. Was there still time on it? I have no idea why. If it was worth nothing, then you should have only paid $1. Is that in Robinhood? $30 is dang expensive. That doesn't make any sense unless it spiked up. If you had time on it, even though it shows zero, sometimes they're not reported correctly. If it's something that's pretty far out of the money too, the bid ask spread can be enough to where sometimes it'll reflect zero. It expired Friday. Well, how did it cost you? Oh, were you close? Was one of the short strikes close to the money? But you let it expire. How did it cost you $30? I don't understand. How do you know it cost you $30? If it expired worthless, it should just expired worthless. If it's on Robinhood, if it's close to the money, I think sometimes they close it for you like an hour before. Really want to have some sort of group either on Discord or Telegram where we can get your alerts and discuss about options investing. Okay, so I have a Discord. I'm not in there. I'm not in there enough. I need to be in there on a regular basis. Otherwise, it just kind of flops. So how about this? I know, like, maybe this next week, I need to like clean up the rooms and the chat areas and stuff like that. I'll put it on my calendar, clean that stuff up, and then at the beginning of the video, I will make sure ask everybody to jump in there, say what's up at least, and hopefully get some ongoing discussion, because the Discords are definitely the best way to get quick help or feedback when you need it. I just don't necessarily always have the time, and it's part of the reason that I do the videos, just because there's some questions that I need to, like, I don't feel like writing an essay, and it's really easier. It's much easier for me to talk through. And even though I'm talking here and you don't like, and if there's something that I'm saying that doesn't make sense, you can say, hey, no, this is not what I mean, or I don't get it. Do you think I'm better off selling put credit spreads instead of selling cash secured puts? Yes, I do. Just because of the amount of cash, and I can't remember if you're trading a margin or not, but the cost of one cash secured put, as far as the collateral you need, you can do something super far to the money and gain so much more. Tesla, since I know you're kind of doing it for primarily income, might not be the best right now at the 850s. I would wait to see what it does after earnings, like a good couple days after earnings. But yeah, I mean, that's the reason I don't do it. I could get rid of all my put credit spreads and just sell cash covered puts if I thought it was better. The only huge thing, oh no, you're not margin, but the only and you know this, but the only like huge advantage, it's only cash covered puts, you end up with shares, worst case scenario. And who wouldn't want to end up with shares? Like, I can't even remember where we were talking about the numbers, like just a month ago, where you're like, I don't know if I should sell it here or here. And I think you're selling quite a bit out of the money. And now, oh boy, if we would have sold it like 600 some or even 700 and somehow got assigned, it would just be the best. Like, okay, get assigned at 700, and now I have some shares that are worth 850. I just let it expire. Okay, no, it expired Fridays. I was so confused. I just let it expire. No, I let it expire because when I tried to close it, it said $30 when it was worth literally zero. So let's see. Okay, I only got $28 for, it wasn't going to close for 30. I'm still quite confused. Like, so you went to like whatever, and I can't remember what you're trading on, but you went to just hit like closed, and the limit price said 30 or 28 or something. Like, yeah, is it showing like right here? I think what probably happened was, again, it was just like a big difference on bid ask. Like, you can see the price different, like it's between 0 and 120. That's how wide the spreads are just on two of them, let alone on an iron condor you have 4. So that's quite a bit more. Iron condors, you're usually not going to be able to close out for less than probably $3 ish before expiration, because you have to make up the difference in the bid ask and that slippage between 4 options. So you're going to have to pay more than somebody's, like, you're going to have to pay a little bit, and you're going to have to sell for a little bit cheaper for somebody to be able to buy it from you. So $3-4 probably is what it would take. Maybe a couple dollars beforehand, but if it expires, but I think that's probably what happened, is you saw that, but then if you let it expire worthless, it should have cost you 0. But $30 if you wanted to close it, probably just slippage, just between the bid and the ask. That's the best I can guess. Yeah, it's super easy for me to be aggressive with your money, right? Like, just sell them close to the money. Yeah, and I think at the time I told you I would be selling like probably at the money. But that's what I see, and that's just that is my Tesla rose-colored glasses. But I think it's not just rose-colored glasses. I think it's just, like, to me, it's empirical data right now. They're proving their growth, their delivery, their adaptability, and there's more factories that we can see that are being built to increase their production. So there's just no There's no question. It's not a and everywhere I drive, I see tons of Tesla. So it's not like a Nikola or a um, I don't know what are the other ones, Lucid or something like that, where I just don't see them, and I don't know that the demand's there. I see like I can go try to order one right now, and I can see I can't buy a new Tesla for 6 months. Like that's how long they're backed up. I was totally wrong selling so far out of the money. I mean, could have gone the other way too. Just that's one of the things I've learned. Just because I'm right, just because I happen to be correct this time doesn't mean that was correct. I can be right. The price can reflect it. Doesn't mean I was correct. But and that's why it's so hard to say like you need to do it. It is very hard to say, but I can say that's what I would do. That's what I see. Are you bearish or bullish for Tesla in the coming weeks? I'm pretty much perma bullish on Tesla. I think any price, like any price, if it's at $1,000, I think it's a great deal. If it's 900, I think it's a great deal. Is it 850? It's a great deal. Um, like any price relative to where it's going, and I don't know. Like I'm not bullish or bearish on it short term. I can kind of understand some of the catalysts and things that are coming up, but it's the long term for me. It's 2023 is going to be insane. Next year is going to be insane with it. It's two new factories pumping out just a ton of vehicles that are so in demand you can't get them for 6 months right now. Like that's awesome. New vehicles coming out 2023, like starting production of that Cybertruck, which has millions, like or a million and some pre-orders. I don't know how many of them are going to go through. I have one on order, um, and they're going to get started next year, and then ramp up production to 2023. My projected time, based on my reservation, I think was like April of 2024 for a vehicle I reserved the beginning of this year. Like, I don't know. It's just, for me, no questions. Talking about credit spreads for Tesla in the coming weeks. What do you think? Put credit spreads or call credit? I'm I'm not going to sell. I will sell put credit spreads. I don't see this is probably one of my problems too, is even though it is ripped up and it's above, and it's a little bit above where I think it should be right here. Just kind of looking at the channel, I think it should have some pullback, but um, at the same time, that's not the side I want to be on. I just don't want to be on it because, one, over the long term, like if I'm wrong on a call credit spread and it just rips up and continues to rip up, I'm just out the money. I'm just like, that's just a loser. It's just going to be a loser. If I'm wrong on a put credit spread, I can roll it out. So like even when we were over here and we had, like, let's say we're at 745 and you open up a put credit spread at 745, you're probably opening them up down at 700. I can roll those out, and I have a lot of patience. I can roll those out 6 months, 9 months, a year. So if I roll those out, I can, get to over here where I'm collecting, or now in which that's what I have. And eventually those could be profitable. I can preserve that capital. But if you're selling, like, anywhere here, if you're selling call credit spreads here, like any of these points, and it never goes below that line again, then what? You're just losing, right? So what, at wherever this is, let's say you sold a call credit spread and then it just What are you going to do now? You don't have any recourse. You're done. There's some truth to stocks only go up. They don't only go up, but they do go up. I mean, that's up. Like, what if you're selling call credit spreads down here, anywhere, right? And that's the main reason the put credit spreads for me are just correct. Even like if you sell them right now at 800, even 840, let's say, and you're just wanting to get super aggressive. Okay, earnings comes down, drops down to 800. Let's say it totally dumps down to 750. Well, you can take those and you can roll them out 6 months. We have 2 more earnings. We have 2 more production delivery numbers. Towards the end of next year, we will have Cybertruck and Tesla coming out. Those are like all huge catalysts. And if you have the patience, you can wait and you can eventually collect on those. So there's like that just works. In my mind, that just works. And I've done that. So you can see these, just to use my own example, these ones I rolled out a long time ago. So I rolled these out May. So I rolled these out May when they were losers, right? And now we're up $4,700 on these. I rolled out, where's the other ones that we rolled out? 3,000. I know there's a big number hanging around here somewhere. These ones. So this was part of I rolled these out when? These were February I rolled these out. So imagine that. February. So I waited 8 months. And this could have been a loser. I mean, I rolled these out for, what did I get? What was my average? My average credit was $6. So I rolled these out. When are we? February. So I rolled them out here. And I've waited this entire time to be able to collect on these things. So that's 8 months. But in the course of those 8 months, we've gained $15,000. And that was something that moved against me. So that's what this strategy, my strategy, lets me do. And we can be down a ton, but in my mind, eventually, even if it's 6 months, a year, 2023, I don't really care. This is where I believe I'm going to end up. So if you roll out 12 months, is it better to have dead money or take the loss and sell new spreads at lower levels? Well, that was kind of the cool thing. When I rolled it out, I was able to gain so much credit. And I hear what you're saying. You're like, my capital could be doing something else. But I don't have as much faith in any other play or company than I do Tesla. So that's me. And yes, maybe I could have done better things with it, or maybe I could have done stupid things with that same money and lost it. So that gave me the time, but I also collected a ton of extra money by rolling it out. So I collected collateral, I collected premium by rolling that out, and then I used that collateral to do the same thing, and that snowballed. That's why we have so many put credit spreads rolling into this time. And nobody knows what was going to happen at all. So like these 20, I have 20 of those chilling. I have like so many now. And if I went back and I could see how much collateral I collected, it probably wasn't too much, maybe enough for opening up 10, 15, 20. I honestly don't really remember, but I collected a decent amount of collateral. And then I did the same thing all along the way as Tesla's recovered, like during this whole time. So it wasn't like I just moved that money out and then didn't get anything for it. When you do roll it out, as long as you're not in the money, and as soon as I'm uncomfortable, I'm rolling it out. So I'm going to roll it out, and then it might even dip down further and come back up, is what I'm seeing. But as soon as I'm uncomfortable, that's when I'm rolling it out. I'm not waiting until last minute or anything, to where I'm paying to roll any of those guys out. But the whether or not it's better, all I can tell you is basically like what I do, but I couldn't tell you which one's better, like for you. Do you see the interview with Elon where he basically calls Bill Gates an idiot? No. Was that after he found out that he shorted Tesla? I haven't. The one that I thought was pretty embarrassing was the one with him and Jack Ma. Why not weekly put credit spreads? Great question. Because there's not enough extrinsic value to where if it moves against us unexpectedly, which can happen, that's part of having a volatile stock. So if it moves down and goes in the money, then there's not enough value there to where I have anything to roll it out. And that's why. You can definitely make more money a lot faster that way, but you can lose a lot faster too. When do you think your close or roll those 35 contracts? Probably, well, it depends. It actually depends on where the price is relative to those contracts. So as Tesla is gaining in value and we get closer, if they're only worth $10 to close out, I'll close them out. But if they still have a decent amount of value, so I don't have a exact answer on that, but just as we get closer, it could be a month out. If Tesla happens to hit 900 or 1,000, then those contracts will be super cheap, and I'll want to I'll probably roll them up if that's the case. If we get closer and we're still sitting in the 700s, then I'll roll them out probably 2-3 weeks beforehand. How many weeks or day ago do you usually roll out, and for how many weeks do you roll out? So I usually roll, and we'll just say usually because it definitely changes with price action events and everything like that. But usually, we'll say I'll roll out the Friday before expiration, and I'll roll it out another 2 weeks. So giving myself like a 21 days till expiration is where I roll them out to. Bill Gates said Tesla couldn't make truck. Oh yeah, I saw that. I hate the fact that just because somebody's famous or rich, they like what they say holds so much weight. It's just like Jack Ma. Jack Ma is even worse. Like if you watch that one with, like, Jack Ma's just not. I don't know. It's not somebody I love to listen to speak. Let's see. When you rolled, did you donut at the same? Oh, did I roll to the same strikes? I don't remember if I rolled. I don't know if I rolled up, down, sideways. I don't remember. Actually, I think there were various strikes like right around there that I rolled all to that point. So they're $10 wide. So sometimes I would take two $5 wide positions and switch them into that 700, 690, because that was kind of me drawing my line in the sand right there. I was like, I looked at a few things, and I actually have a spreadsheet that I made, like my actual prediction month by month, where I expected and gave myself some leeway. I was like, there's no way that Tesla's ending the year below 700, and so that's why I gave it to the end of the year plus a month plus some extra weight, and rolled it out. So I had various positions that I rolled out to there, but whatever it was, I probably rolled some of them up, because at such a low level, it was pretty easy to do. Sideways, down, didn't really matter. I just was collecting what I could, moving it out to a point where I can wait, and that was it. What do you think about DraftKings? I'm running an Iron Condor. That's probably a decent strikes. I think it's really not even moved. I mean, I don't think gambling's going anywhere. And I haven't been paying enough attention to it. I know they had a bid in for a company, I think. DraftKings, yeah. What are we on? Yeah, I don't. Oh, I do have a line on DraftKings. Wonder if it's going to see some support. But let's see. They got an exclusive deal with the NHL, and the stock goes down. Yeah, I don't know. I feel like DraftKings is something that they put so much marketing into that I expected bigger things. Like I thought that investment was going to pay off, and maybe it will long term. I don't think gambling is going anywhere, so I like them long term. I don't love them. I'd rather own some more Tesla or Palantir. And I'm down a ton on their leaps. I'm almost thinking I'm down so much on it, I should just keep it. But yeah, I don't know. I don't know what the long-term expectation, and if it's something that you follow, like if you're playing that one, I just hope you're following it enough to know what the catalysts are and your own expectations. But I think that's pretty reasonable because we've had 47 like the low recently, and I have just not been following it day by day. Oh, they just really wanted to try to test your 47, didn't they? Looks good. Looks good. When does it expire? Is it expiring next week or something? Let's see what else we have. Yeah, when did they get that NHL deal? Because what was the company that they were bidding on that like MGM owns or something like that? I was going off fundamentals. Their earnings is coming up. Then don't you want to sell before earnings? Because that would be like you don't want earnings to come and then it has a major move and get your Iron Condor blown out. October 29th. And then you're gonna close prior to? Nice. Yeah, and probably want to sell a decent amount before that. I don't know if they usually get an earnings run up or not. No, not there. Maybe they don't. How have they been? Earnings. Yeah, entertain. That's what it was. I just don't. I thought we would know about that by now, but I haven't. Again, I haven't been paying enough attention. Also bought some Apple Leaps. I wonder if you bought the ones I sold. I just sold my Apple Leaps. Like this was it this week? I think Monday, Tuesday, or something like that, which was great timing. I think. I think Apple will probably do well, and your Leaps will probably do well. I just realized it's not a company that I care to own any more than Tesla. I wonder if anybody got some Alibaba calls. Like that ripped up. Hey Jason, Palantir tip ranks has a high of 31. I know it's one of your preferred stocks. Where do you see Palantir going in the next couple of years? I don't know. I want to hold it for years and years and years. I like what they do, and I like. I mean, I guess like what they do as a company, but I like what they do, like to help out to like just help people and kids and find like and that kind of things. Like that's actually huge to me. Um, their motivation and the type of people to do that stuff. So that's huge. Um, so in the next couple years, I guess what do I see? I mean, mid 30s ish, maybe $40. I don't know. It's such a I think it's such an interesting stock because it's not easy to understand. They don't cater to investors. They could care less what I think about them. They don't care what you think about them. Um, all their marketing and all their like demo days are geared towards like data scientists, not us at all. So I don't think it's sold in that way. I mean, and then once in a while, Wall Street Bets can get a hold of it a little bit and get some rip up there. But it's one that I think I've wrapped my mind around how important and how important it will be, and how when they gain new customers, they'll become so reliant on their systems that they can't really move away. Um, Along with all their military and government contracts, I think that's huge for the long term. And I don't see anybody else doing what they're doing. So those are all things. I really don't care what it does in the short term. As far as like I don't have a price target. It's just like fundamentally a company that I want to own. I just want to own a part of that company. Um, Tesla, I want to own, and I see where their valuation is. Palantir, I just want to own. So I'm fine with whatever happens. Let it go to $15, and that's the difference between owning a stock for profit and owning a stock because you love the company. Um, Palantir can go to $15. It can go down to 10, and I'll still love the company just as much, and I have no problem like that. Compared to some of my other stocks that I have, when I look at them and I see that I'm majorly down, I'll be like, damn, why did I buy that? Where Palantir, I'll be down, I don't know, I was down a couple $1,000s or something on it at one point with way less shares. And that didn't bother me at all. Like I'm like, that's fine. I'm not buying it for next week or next year. I'm buying that for the absolute long term. And I think it can totally be a bumpy road. It could go back down to 15 or whatever, and it's just fine. Palantir tip ranks. Yeah, it's funny because I don't have any interest in looking at a lot of analysis. I think there's like more bad analysts than really diving in good ones. So low, what do they have? Low of 18, average of 24, and high of 31. Yep, could be. Six. That's funny, and half of them say to sell it. I don't know. Wish I knew. My crystal ball is not working, but there's not another place I really want to stick my money. Palantir and Tesla. They're the couple that I really love. Yeah, and that's just what I think. I mean, that's after watching hours and hours and hours of their videos and like what they do. Um, so yeah, it just doesn't matter to me. Current price. No, I would like them to move up, but I'm fine also. I'm fine with this total sideways trend. We can just sell premium on it for like in perpetuity. Look at Robinhood's Tesla analysis. Oh yeah, didn't they updated it, right? What do they say? I think is it 600 is what they're saying? Let's see. It's what they're valued at. Where's there we go. At least 40% people say buy it. Like in my mind, why would you sell this? Like, why would you sell this stock that in my mind clearly is going to become the most valuable company, period, unless there's another one that comes up that takes the place of so many. Like, why would you ever want to sell it? I don't get it. Okay, because bears say traditional automakers are investing heavily in the development of electric vehicles, which will result in Tesla losing market share and seeing a deceleration in sales growth due to increased competition. Have not seen that yet. They're still trying to figure out, like, none of the traditional automakers are vertically integrated. They don't have the battery supply that Tesla is going to have. There's so many things missing on that. EV adoption is driven largely by government initiatives. That is just not true, I don't think. I think now it just makes sense. Like, now with no incentive, I didn't get any incentive to buy my EV. It just makes more sense. It's the safest vehicle made, period. And I think the best. But anyways, EV adoption is driven largely by government initiatives, such as regulation and subsidies, which will limit long-term market growth for Tesla. No. As range gets better, and people get more used to it, and they realize that, like, range anxiety is not important, people will just buy these. And as there's more charging, like, infrastructure, that'll just gain. This stuff is just wrong. Solar panel and battery prices will decline faster than Tesla can reduce cost, resulting in little to no profits for the energy generation and storage business. I don't even understand what they're saying. Like, if solar panel prices and battery prices come down, that increases their margin, or they can lower the prices to meet that and keep the same margin. That, like, who writes this? What's our fair market? Fair market value is $600. I would love to pick up some more shares at $600. Just drives me nuts. And these guys do this for a living. Google says 100, buy nothing else. The biggest hurdle for me is the fact that it takes nearly an hour to fully charge compared to 2 minutes to fill up a gas tank. That's a huge time drain on the road trip. Okay, got you there. So, I love that. All right, so first, I think it takes more than a couple minutes because you still have to drive to gas station, fill it up, and then drive away. But for the 9 months you're not on a road trip, you never stop at the gas station. You plug in when you get home. You spend zero time driving out of your way to go to a gas station and sitting there filling up and touching gas and getting gas wherever. I know it's not too often, but I know it was kind of gross getting gas on my hands every now and again. So you spend zero time doing that. So all the time that you're at home, you just drive up and you plug in, and you don't have to go out for oil changes. So even if that's 5-10 minutes to drive out of your way to go do that stuff, 10 minutes a week, like, add all those up, and it's not an hour to fully charge. Like, literally, you spend 10-15 minutes there. They charge at over 1,000 miles an hour. So it's just off, but you won't fully get it until you drive one. It's different. You have to stop. Like, if the range is 300 miles, that's 5 hours of driving before you need to do anything. You're probably going to have to stop and pee or eat or stretch your legs with 5 hours of driving. You're not going to drive. I mean, maybe you will, but for the most part, you're probably not driving 10 hours a day. Like, that would suck. But you're just not spending that much time. Like, it's not as much as you would think. And you got Netflix. Like, it has Netflix and YouTube and everything else in the car. Like, it's comfortable. So when you go on the trips, you charge at that high rate of speed, like 1,200 miles an hour. So you're spending 10, 15 minutes there. The supercharging stations that I've been to are super well positioned. It is get off the freeway, and then it's right there. Take a left and a right, and they're not like more than a quarter mile, maybe maximum, but usually not. They're usually like right off the freeways. So piece of cake, closer than gas stations a lot of times, or maybe as close as the closest gas stations. And it's all, and not to mention the $85 to fill work van. Good Lord, that's like a whole month in a Tesla or something. And oh my gosh, I'm gonna lose it. I can't remember what I was thinking. I just saw that $85. So it is not as bad of a time drain as you would think. Maybe you live out in the middle of nowhere with it. Oh, and that's the other thing. So you say, I live in Seattle, I'm going to Arizona. And then it plots out exactly where you're going to spend the least amount of time, which is very efficient to be able to fill things up. Like you don't even have to think about it. It's just until you get one, it's more difficult to explain. But like once you have one, all the time you save during your normal life, and then so what? You have to spend 15 minutes a couple times. I don't know how far your road trips are, or how many people really make road trips all that often. Once or twice a year wouldn't be bad. Yeah, don't just base stuff off this crap. And gas is freaking expensive. Yeah, I've heard it's like $4 or $5 or something like that. What do you think of AMD? I love their CEO. They're good, and I like their product. And I just haven't. Yeah, and I use their cards to mine with, so that's pretty cool. But I'm really just trying to like, I'm gonna narrow my scope down to mostly Tesla and Palantir and not have to worry about a lot of it. That's part of what I'm trying to transition to. But $85 for fill up, man, that's crazy. I don't have a Tesla, but that range I don't see as a big deal. I fill my tank once a week and get 260 miles a week. I worked for Instacart, and I noticed a lot of people, but don't know metrics. Yeah, 200, like, yeah, it's just not that big of a deal. It's, and I get it. I understand because I was thinking the same thing prior to me getting one, and now that I get it, and now that I do it every day, it's zero worry at all. Think of all the oil changes that you don't have to go to. I mean, 260 miles a week, that means you're oil changing what, every 3 months? Like to me that's a time drain. That's an hour. I took my girlfriend's car to go get an oil change, and I like have to go to the place and sit around and wait and wait and wait and then bring it back, and I don't know, whatever it was, like $100 or something like that. I would rather I would rather stop all along my road trip for 10 minutes, 15 minutes a piece, and whatever, go use the bathroom or whatever, than sit at the oil change place in the waiting room for an hour while they change the oil and pay $100. So, yep, Tesla. I can't believe I actually have. I have. Um, did I show it? I don't know if I've shown it on any of the videos, but I have a 2023 850 leaps on Tesla in my TD Ameritrade account. I'm 70 cents from being in the money. That thing's a beast. It's gonna be awesome. What's up? I'm sure they will figure out a way to increase the range over time, but you just don't need that much. Like, you can buy ones with more batteries. The batteries are a good portion of the expense, but literally, like 99% of people are not going to go drive more than 200 miles in a day. That's just the truth. I can't remember what is the average average yearly mileage on a car. What is that? 13,000. 13,000. And 13,000 divided by 52. That is literally two, like yours. That's funny. 250 miles a week. And that is less than a range of a Model Y. 50 miles a day would be average. 1,000 mile per hour charge time sounds fast indeed, but you can get 500 miles of range in 3 minutes in the nice. That equates to, you're right. Yeah, it's actually above 1,000, but I think it's like 12 or 13. I get that, but how many 500 miles are you gonna go? That's it. I get that it's faster. Gas, yes, is faster. Except for, like, take your whole year. I went on one trip this year, but your whole year I've stopped at the gas station zero times. I've only stopped like when I went to go visit somebody, and so I stopped at a charging station twice. So I've literally stopped twice in a year, as opposed to how many times you had to stop for your 5 or 10 minutes, let's say. So I drive. Oh, we'll do some more math. Okay, so I drive like 34,000, something like that, 34,000 miles, and you get 500 miles range, which I don't know what you're driving, but that's pretty awesome. That seems super high. So that's 68 times I would need to stop, times, can we say like 8 minutes? That's a couple minutes to drive there, whatever, traffic, a couple minutes to get back on my way, and 4 minutes to fill up. I'm going to say times 8 minutes divided by 60. That is 9 hours a year, and that's not including oil changes. So oil changes would be another 10 stops, and I would give that an hour for each oil change, because 3,000 miles is pretty average. So if I had 10 hours, so 19 hours total for your gas and oil. And maybe you have to have brakes done every once in a while too. I don't know. We won't even count that. Where did it go? 19 hours. And for my entire year, I stopped a couple times for maybe 30 minutes total. So half an hour, let's say an hour, you're still stopping 19 times, or taking 19 times for practical purposes. Or if I did 3 or 4 road trips, at least 4 times as much, but never less. So this is like my practical anecdotal. This is like what I've done in my real life. This is what it would cost me to drive. And with your 500 mile range, that must be a Prius or something. Let's see. I put 2K. Let's see. Oh, I gotta get going here. I gotta head out the door in like a couple minutes here. Anyways, I put $2,000 on last year. I just got my car inspected. I hate driving. I love driving. I have a Tesla. What does it cost for a full charge on empty? It's 10 cents per kilowatt hour, like where I live. So I think it's like 10.5 times. It's a 75 kilowatt. I mean, you're never gonna go empty, but let's say times 70. So like $7.30 for 300 miles, pretty much. It's about what that is, I think. Hey, I got $5,000. What spreads would you recommend to someone with a smaller account? $5,000 is not a small account. First of all, that's a lot of money. SPY 0 TDs, no. Like, well, if you're just starting, not those, because they take a lot of monitoring and stress. I would do something farther. Like, what would I do with $5,000? I would do Tesla put credit spreads and do them way out of the money. I would just wait till after earnings. And, as long as nothing changed, I'd play down in the 700s, 730, 750, something like that. That's exactly what I would do. So, and thank you for loving my videos. I hope some of them are helpful. And I gotta get going. I have an appointment at 2:00, and I think it's like 15 minutes away. So I guess we'll see you guys Monday. Thanks for stopping by. You guys are awesome. Make my day. Love you, and we'll see you as soon as we can. And